Welcome back to Switzer on Sky News Money. Now, Donald Trump spooked Wall Street and Wall Street spooked our market, but is Donald Trump the only reason our market is drifting lower? Let's see what the founder of FN Arena, Rudy Philippek Van Dyke, thinks. Rudy, great to see you.
It goes both ways.
All right, mate, is this all Trump? Is this market down today because of Donald Trump and his mistakes and misdemeanors?
Well, if he's not the only reason, I would think he's the key reason. Yeah. I mean, if we go back a little bit in time, the market had been, until very recently, been quite strong. Had pretty much ignored just about everything that was thrown at it, and it could have been interpreted as a negative. And but we should never be completely oblivious to the fact that there's always room for surprise. I've always thought that one of the reasons that underpinned the strength in the US market was the prospect of infrastructure spending, tax cuts,
deregulation,
things like that.
Yeah.
And now all of a sudden there's big question marks there, and depending on whether we want to price that out completely or not, that's exactly happening now. So the market has been hit right in the center of its circle of confidence. And I mean, on a personal level, I think the market always thought that Trump was too much of an asset, while ignoring that he's actually a liability. And I think the liability part is now revealing itself.
So to sum up, if Donald Trump wasn't having all these political problems and the agenda for tax reform, deregulation and building that Great Wall of Mexico, which he promised, if they're all online,
yes.
Do you think we would probably looking at another leg up of the stock market because it was delivering on the promise?
I don't think we would have had a leg up. But we probably would have just drifted sideways, I think, with the exception maybe of Australian banks. They definitely left a mark to the downside with their results this month. Yeah. And then plus they go ex-dividend this month. Yeah. They looked all of a sudden expensive.
All right, now,
but apart from that, like last time I was here, I actually flagged that in the absence of a risk-off effect, I would have thought, and that what that was happening, that the tension would have gone to next levels in the Australian share market. Yeah. But now, of course, we're now on risk off. That's completely out.
All right. So So let's just put the Trump issue to bed and just hope it gets sorted out, because we are going to be we follow Wall Street obviously. Horrible, but let's go to you've mentioned the banks. Yes. We've also seen some average earnings results from some companies. Not necessarily bad ones, but average ones. Are we downgrading the estimates, the forward estimates for earnings for the season coming up?
We are actually.
Because we were optimistic that they were going to be pretty good.
Yes. And
you're now going to call them only okay.
What we often see. Obviously, everyone always concentrates on the reporting season. Yeah. But we have an out of season, if that makes sense. And that's what we're going through now. Yeah. Now we're getting the companies like Dulux Group, Oraton, let's pick the bad ones. And we have, of course, the banks. We have Instack Pivot. We have Orica. We can get Technology One, program maintenance. So we have a whole series of out of season reporting results, and including the banks, we just have to. It hasn't been fantastic.
Nothing's exciting us. And I also noted, Rudy, and I know that in terms of absence, last year when Macquarie did its show and tell, all the news was quite optimistic, wasn't it?
Yes.
But I haven't heard anything really positive coming out of that little Macquarie show and tell.
They did surprise, but see, that's the same thing with, for example, Dulux Group surprised as well. But then you look a little bit forward and you see the challenges coming, and they're there. Even management teams acknowledge that. So it sort of tempers from getting too excited at this point in time. Absolutely.
Okay. So are we then looking at a potential buying opportunity on the basis that if this market overreacts to, say, Trump, for example, and we lose 5 or 6%, would you call it a buying opportunity on the basis that eventually the Republicans probably will get some tax reform through and the market will say, OK, he's a bit of a goose when it comes to political machinations.
Yes.
But when it's all said and done, the market's getting tax reform.
Well, I think there's two things here. I think the whole reform in the US is obviously more important for the US market.
Yeah.
We can and we should at some stage dance to our own tunes. And for example, the resources sectors, basically they've had their correction since February already.
Yeah.
I mean, it's not like they're starting correcting now. The banks essentially is a local story for us as well.
Yeah.
And the fact that we have companies like, for example, Aristocrat Leisure, CSL, which also have very strong links to the US, they should benefit if anything comes through, but they should not sell off for me, and they're not essentially, because their prospects are, by the way, Aristocrat is also coming out with results. I forgot to mention that one.
Yeah.
That's also out of season, and the expectations are high. So it would actually be better for the local market if we could forget the shenanigans in Washington, and we could just focus on, because we do have good companies.
Yeah.
Not they're cheap, but they are good companies. There's definitely more, if you read the analyst reports and you see the positive scenarios for those companies coming through, those stocks look expensive, but there is more upside there. If Aristocrat, for example, comes out with another market-beating result, then the share price will again have more upside than what appears now. So, yes, some stocks look cheap, some stocks are selling off. You see also in the weakness this month that the likes of CSL and Aristocrat, they're not really selling off, because that optimism is still supporting those share prices.
And they are regarded as world-class businesses. And in fact, my next guest from WCM, that US fund manager, he has one Australian stock in his CSL, a world-class business. Mate, great to see you as always.
My pleasure.
Rudy Philippek Van Dyke from FN Arena. After the break, Paul Black, who's the CEO of one of the most successful global funds in the world, WCN, from Laguna Beach, California, will join me at the desk to talk about a unique offering for retail investors.